Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to do a comparison between Hester Biosciences and Sequent. Let's look at which of these two companies are better. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about this comparison, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can get the YouTube membership. That's a monthly membership by paying from different means. Now about this industry, animal healthcare industry is an interesting space, and very few, you can say, online or very few listed players are there in the space of animal healthcare. It has consolidated globally, and 3 to 4 players are there which are big in here. One or two unlisted players are huge in this space. Uh, Business should increase as globally things get better, and animal care is taken as one of the priorities, and with more people having pets at their homes, and a lot of people are now, or a lot of countries are now thriving towards a you can say betterment of the animals. I think animal healthcare industry should proliferate going forward in the years to come. So top firms should do well, as hard to get approvals in this space. So it took around 3 4 years for one of these two companies to get US FDA approval. There are a lot of checks and balances that goes through. So it's a business where entry barriers are large, and very few. That's why pretty much why very few companies are there. So if you look at the comparison, Hester Bio has a market cap of 2000 crore, which is a smaller company compared to Sequent. Margins are better at 30%, and ROE of 20% is much better than what Sequent is doing. Currently trading at 10 times sales to market cap. So 10 times sales is Hester Bio, which is expensive compared to what Sequent is at the moment. There is around 1% FII and DII, you can say, investment. So not a lot. 25% is the return on capital employed, and stock is up 48% in the last 12 months. The promoter holding is same in both the companies at 53%, and it is trading at a PE of 44. If you look at a Sequent, then Sequent has a market cap of 4,000 crores. Margins are less, as I have explained, compared to Hester, but it is trading at only 2.7 times sales. So it is trading at a very interesting level. 4,300 crores is the market cap, just a little bit more than what is written here when I made the presentation a few days back. Trading at around 2.7 2.8 times sales, which is not expensive at all. It has come down from 330 levels due to 1 or 2 quarters of subdued results. There is a good amount of FII and DII holding here of more than 16%, but which has got reduced in the December quarter. So what happened is that FII holding has got reduced from 14.5% to 6.5%. So kindly take that on note. Again, when I made the presentation, the December shareholding pattern was not available. So at the moment, it is 6.5% FII holding and around 2% DII holding. Still better than what Hester is doing. Return on capital employed of 17%. Stock is absolutely flat on a year-on-year basis, just about 10% higher than year-on-year, and it is trading at a PE of 58. But hopefully, numbers should improve going forward in both the companies. So both are top-notch companies. Valuations are stretched in the whole industry itself. So need to look at results in sequence before taking a call. So basically, what you should be looking at is how are the December results and commentary of the management, and then take a call. So probably by February end, in order to take positions here. Although the stock has run up over the last 2 3 weeks. but I still feel that somebody who is an investor who is a less risk taker should look at results and only then take positions in any of the stock. Both should do well once the global economy stabilizes. Both the companies should end up doing well. And Sequent has had some institutional selling, so need to look at shareholding as well. So as I explained, around 8% being sold off by the FIIs, foreign institutional investors. That tells a lot, but I think major part of the selling is done here with Sequent. Hashtag is small, but looks more stable in nature and the way it is performing chartically as well. So one can probably look at both the companies, but first look at the results of the December quarter and then take a call. One should be looking at getting into something which is more attractive in nature. In that respect, I still believe Sequent is much better placed than Hester. But again, look at the numbers first and then take a call on any of these companies, and don't put more than 5% holding into any of the stock. So this was my video on the comparison between the two companies. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.